for me, away from the technology news, the absolute key piece of importance was Jensen Huang talking about his relationship with Taiwan and Nvidia's relationship with Taiwan. The basic plan is to build a supercomputer for Taiwan, but he was kind of at pains to point out that this is in partnership with TSMC and other leading names that are Taiwanese champions. Purely from a geopolitical perspective, how crucial was that, or how high level was that for Jensen Huang to say such a thing?
It's very important, and Nvidia, with Jensen Huang at the helm, has been on quite the tech diplomacy tour, the chip diplomacy tour, really over the past few days and the past week, including in Taiwan, as you referenced, where they're talking about building a supercomputer. Taiwan is a very strategic partner, a trusted partner of the United States. It's very important for our shared security, and that's right off the heels of some major deals announced in the Gulf over the weekend and late last week with Saudi Arabia, with the UAE, who also want to be global capitals when it comes to artificial intelligence. And there's going to be more sharing of advanced chips there. So all of that is really important as the United States seeks to secure trusted partnerships with important partners across the globe when it comes to advanced semiconductors.
Michelle, those deals with Gulf nations, how concerned are you that they can act as sort of backdoor indirect access for China to U.S. technology?
It's definitely a concern among some in the U.S. government, including in Congress. But I'll say the big picture is we have to do two things. One is maximum proliferation of American technology, including our semiconductors, because if it's not our technology, it's going to be our adversaries' technology like China. So max proliferation is really important. At the same time, we also have to have maximum security controls to make sure that those technologies, including chips, don't get diverted toward adversaries like China. Those two things have to happen. It can be done, but it requires that companies and the U.S. government and our allies, by the way, work really closely together. And that's what tech diplomacy is all about. And I think you see the White House, the Commerce Department, as well as leaders in Congress with the new Chip Security Act, making sure that those security controls are in place.
Jensen Huang's tech diplomacy, I think, is worth lingering on. Taiwan is clearly important to Nvidia, and we remind ourselves that the mainstay of TSMC's lead-edge fabrication is in Taiwan. But China is also important to Jensen Huang, whether that market is closed to him or not. Is he getting the balance right?
Well, it's interesting that you mentioned that, because on this tech diplomacy tour, there were the deals announced in the Gulf. There's the news in Taiwan today. But let's also not forget that he announced a new research center in Shanghai just a few days ago. And it's no coincidence that all of these things are happening in the same time. And look, he's got a global business to run. He definitely has multiple interests that he's trying to meet. What we have to make sure from the U.S. national security standpoint is that all of that doesn't endanger American national security and give some of our most advanced technologies to China. So the role that he plays in working together with our government, we have to make sure that business objectives meet national security objectives, and it can be done, but we have to be working together in order to do it.
All of this should help Nvidia's stock price rise further, as the artificial intelligence, AI chip giants' earnings have been increasing, and the AI market is predicted to reach trillions by the end of the decade. However, Nvidia and the stock market as a whole were affected by broader economic worries that were triggered by President Trump's proposal to impose tariffs on imports. Additionally, export restrictions that recently stopped Nvidia's sales of chips to China also caused investors to worry. Nvidia's stock price surged over the previous 2 years, but in recent weeks, it has presented a new buying opportunity that some may have never thought possible. Nvidia's stock consequently dropped as much as 29% from the beginning of the year to its lowest point last month. Although it has now begun to recover, the price is still quite affordable when compared to projected revenues. Given that a significant potential catalyst is coming up on May 28th, investors are already making predictions about how long it might remain at that price. I'm referring to Nvidia's quarterly earnings announcement, which often provides us with significant updates and an outlook for this industry titan. These days, this is especially crucial because there is still worry about how possible tariffs will affect electronics and the future of chip exports. Should you buy Nvidia before this important date? Let's investigate. It's vital to remember that Nvidia has wowed investors quarter after quarter with its earnings growth and product updates and goals. Revenue growth for the corporation has been double or triple digit, and it has consistently hit new milestones. Sales profitability has also been excellent, with a gross margin that is continuously higher than 70%. Additionally, Nvidia has maintained a gross margin above that threshold even during the expensive period of a product launch. I'm referring to the recent introduction of the Blackwell architecture and chip. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Investor sentiment towards Nvidia does seem to have turned around, especially after this partnership was announced with Humane in Saudi Arabia. And there does appear to be a data center boom happening in the GCC. My colleague Dan has been reporting on how ADNOC is harnessing digital solutions to raise the bar on production on offshore oil fields. This is a natural fit. The GCC is a natural fit for Nvidia, yes?
Playing in the United Arab Emirates, playing across Saudi Arabia and the Kingdom, trade, these are very critical, futuristic parts of the world. They're massively investing in AI, and they understand that while oil is the current revenue stream, that the future is going to be digitalization and building the future. We've already seen it in these cities, but these investments, 600 billion, over $1 trillion across Qatar, across Saudi Arabia, this to me is indicative that the Middle East understands the criticality of playing with AI. They also understand that they want the US and the West as their key partner, because it wasn't just Nvidia. It was Nvidia, it was AMD, it was Cisco, it was Qualcomm, it was ARM, it was Amazon. They understood that these are critical relationships. They're going to bring hundreds of thousands of GPUs for G42 and their installments, but they're also going to see US companies expanding data centers in the region, which is good for the region, and it's good for the U.S. strategy to diffuse its AI around the world.
Dan, does it feel like Nvidia is simply hedging its bets and really pushing aggressively on diversification geographically? Because we spoke in my previous program on Inside India about Nvidia's flurry of partnerships in India with Reliance and Tata Communications. It's building out a Hindi small language model. And then, of course, we touched on the GCC. Does all this tell you that this is the China offset and Nvidia are simply having a really torrid time with the trade tariffs and with the US chip restrictions in managing and navigating the China market?
China has a real Nvidia has a real advantage that its technology will be consumed everywhere in the world. And there's so much demand right now that I think it can be very successful, even if the China market was less available, which it already is. But we're also hearing that there is going to be the possibility of a new modified H20 chip that could quickly offset the lost revenue, the $5+ billion write-down that just took place. But at the same time, they have the Middle East now. They have Europe. They have access to, of course, the US and its markets and every other part of the world that is continuing to invest heavily in AI. They're going to continue to invest heavily in Nvidia. And that's why this Computex keynote wasn't just about its hardware, just about, building a connective tissue between its hardware and other chips. It was also about its software, its platform, how much faster you can deploy on Nvidia, because there is competition coming. And it's not only coming from China. The competition is coming from US-based companies like Google and Microsoft, Amazon, and of course, AMD. They're all wanting to play in this space. Nvidia has a multi-cycle lead. It is their job to keep that lead. And one of the best ways to keep it is diffuse its technology to the Middle East, diffuse its technology across Asia. And of course, if it can, keep China from moving any faster. But I have my doubts there. Yeah. I do believe China will move as quickly as it can.
The business, however, continues to push forward with its focus on innovation, announcing intentions to offer chip and/or entire architecture changes annually. Blackwell Ultra is expected to arrive in the second half of this year, while the Vera Rubin architecture is expected to debut in the second half of next year. Nvidia should continue to lead the AI sector as a result of this. Last but not least, Nvidia has shown in recent weeks that it can handle difficulties like tariffs or export limitations to China. For example, in order to mitigate the effects of potential tariffs on electronics products, Nvidia announced a sizable investment in US manufacturing. According to a Financial Times story, Nvidia is seeking to establish a research and development facility in Shanghai in relation to the Chinese situation. The goal would be to create designs that would satisfy Chinese consumers' demands while adhering to the stringent export regulations set forth by the United States. Nvidia is demonstrating that it is proactive and resourceful when faced with challenges. The company's objective is to manufacture all of its AI supercomputers in the United States. This is a big change from the current situation, where most manufacturing takes place in Taiwan. Nvidia has a history of exceeding analyst forecasts, and the company's recent earnings report showed that Blackwell's launch was going well, with the product bringing in $11 billion in its first quarter of sales. That particular aspect shouldn't affect investor sentiment because they already know that Nvidia will be paying $5.5 billion after the United States further restricted exports to China. Still, in spite of Nvidia's measures to handle the export and tariff difficulties, these risks do persist and might weigh on stock performance at any point. Additionally, the stock could face challenges from any setbacks in the process of a trade agreement between the United States and China or other nations, as well as from any economic data that is less optimistic than anticipated. The ability of other large tech companies to invest in AI infrastructure and their overall financial stability are key factors for Nvidia. In light of everything, is it wise to purchase Nvidia before May 28th? Compared to a few weeks ago, Nvidia is now trading at 30 times forward profit projections. However, it's still well below its peak from this year and last, making it quite affordable right now. Though I wouldn't anticipate a sharp shift in valuation that would instantly drive the company into overvalued territory, it is possible that good earnings news will boost the stock and valuation. As previously said, there are possible threats to short-term growth, but in my view, Nvidia's promising long-term possibilities outweigh them. Nvidia is a good investment, but if you plan to hold on to it for the long run, it won't significantly affect your final returns, whether you buy now or after May 28th. Even if it stagnates or drops at one point, Nvidia stock may give your portfolio a significant boost over time because this hot company may only get hotter as the AI story progresses into its subsequent chapters. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Jensen Huang spent a good bit of time sort of reiterating where we're at and how quickly this AI is diffusing and the investments that NVIDIA have made and why these are so important to what comes next. But as you mentioned, two of the big announcements, one being NV Fusion, sort of opens up the walled garden. A lot of people have looked at NVIDIA and kind of called it the Apple of the AI ecosystem. Everything has to be all NVIDIA. And while this NV Fusion doesn't completely make it, say, open in the sense of making all of the different chip makers available to the different NVIDIA infrastructures, it does open up CPUs like the one you mentioned from Qualcomm just a moment ago to be able to pair with NVIDIA. And this is powerful in terms of bringing forward NVIDIA's ability to connect these computers together and start to drive innovation outside of the NVIDIA ecosystem, but also back in. As Jensen said, he wants you to buy something from him. On the other side, on the Groot 1.5N and what they're doing with Dream, it's so powerful. We know that the next big frontier of AI is all about being able to connect the physical world and make it, sentient and make it able to understand the world. And with what they're doing with Groot, it's really advancing, bringing it forward. And it's not just about NVIDIA, it's about all the companies building robotics and building humanoids being able to move faster.
So, Dan, thank you for that overview. When you think about these developments from an investor's perspective, are they bullish or bearish for NVIDIA, given that they are sort of shifting away from that walled garden approach?
I think it's largely bullish. Of course, you could say you want everyone all in on NVIDIA. I'm here at Dell Technologies World, and I guarantee we're going to see more all in on NVIDIA. But realistically, that's just not how enterprises and how hyperscalers build. We know that the large hyperscalers are building some of their own custom compute, but they're also building with NVIDIA. Why not open that up so these companies can go big, but still benefit from where NVIDIA is leading? And that's in many areas, including how fast they can connect these machines to one another to deal with this massive volume of data. As we move to these agentic systems, which we are in the earliest days, and then of course, as we do connect the physical world, we're going to need so much compute, so much energy, so much efficiency, and so many tokens that I think trying to close the garden off entirely is probably a risk. And Jensen right now is playing his cards really well, whether it's how he's dealing with the politics of China and the Middle East, or how he's handling kind of opening up just a little bit to make sure that NVIDIA investors have a way to grow, even if not everything is NVIDIA silicon.
Yeah, let's talk about the geopolitical dynamic happening with the company obviously announcing that office in Shanghai. To what extent do you think it is a risk for NVIDIA to be caught up as sort of a non-tariff barrier that can be looped into all of these pending negotiations, primarily with China? Do you think that that is going to continue to be a volatile headline driver for this company?
It is going to be volatile. And this is really a two-sided argument. Jensen and NVIDIA wants to see its AI diffuse to the world. What happened last week with Humane and across the Middle East was really bullish to see Western AI technology being selected by countries that we do have deep partnerships, but also countries that are complicated in politics, in economics. And seeing that, diffuse to the Middle East is a good example. China is going to be the most complicated. We saw it years back with the telco infrastructure. We're seeing it now with AI infrastructure. We've heard it from the Trump administration. The US and the West wants to be the world's supplier of AI innovation. We want to make the chips in the US and not just in Taiwan and not just in the East, but we also want to make sure that it is the US and the West's version of AI that gets diffused, that gets deployed. And that's why those laws changing were so important. So we are really in a battle. China is the only other economy in the world that has the capacity and the intent to do what we are trying to do with AI. And the next multiple decades of economic leadership, Madison, are going to be driven by who wins this AI race. China's going to compete. I would never say they're not going to get there. I think they have every shot of getting there. We're making it difficult. But I believe NVIDIA, I believe the West is showing, and I think Jensen's hedging very well in the event that a trade deal, that we're able to find balance in policy and to be able to continue to supply China with something to maybe slow its own innovation, or at the very least continue a partnership on an economic level.
U.S. export limits on AI processors have drawn harsh criticism from NVIDIA CEO Jensen Huang, who warned that the regulations are hurting the company's finances and undermining America's position as a leader in technology. According to Huang's recent Stratechery interview, the diffusion rule as it was written will exactly cause us to lose our lead if the goal of the diffusion rule is to ensure that America must lead. China is a crucial market for the company's AI infrastructure, but it is prohibited from selling cutting-edge processors like the H20 there. Consequently, Huang disclosed that NVIDIA lost over $15 billion in sales and wiped off $5.5 billion in inventory. According to Huang, no business in history has ever written off so much inventory. We lost out on $15 billion in sales and most likely $3 billion in taxes. By pushing them to innovate domestically outside of the sphere of influence of the United States, Huang contended that cutting off China runs the risk of inadvertently bolstering competing ecosystems. He cautioned that their leadership and technology will spread throughout the world if we don't compete in China and let the Chinese ecosystem develop a rich ecosystem since we aren't there to battle for it. He underlined that since artificial intelligence is a full-stack technology, it cannot be adequately controlled by limiting only one layer, like semiconductors. Huang urged policymakers to focus on expanding the global reach of American platforms and technologies instead of restricting exports, saying that it is nonsensical to simply say, let's go write a diffusion rule, protect one layer at the expense of everything else. According to Huang, the goal should be to accelerate the adoption of American technology worldwide before it's too late, rather than limiting other nations' access to American technology through AI diffusion. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Your eyes on some of the flows. What are some of the levels that you have on your radar?
Yeah, well, going into the close, we might be looking at more of a tight range kind of going into the close here if we're able to hold up at these current levels. To the upside, looking at 59.60, there's over 113,000 contracts that are traded at that level today. So that can be a pretty big area of resistance kind of going into the close. And then to the downside, you can look at 59.30. I would say that there is probably some pen risk still around these levels, 59.40 to 59.50-ish. And then moving to the upside here, any type of breakdown, 59.30 volatility would be kind of on the radar here. But we've had some really decent gains, kind of backed off just a little bit here, Alex, as we are kind of going into the close. But obviously having a nice little rebound after seeing those overnight losses going into the morning. We saw some really aggressive buying activity taking place early on, maybe some short covering when it came to the futures just in general. And today you just seen some positive inflows pretty much across the board when you're looking at the equity space. I don't have a chart here, but I do want to kind of highlight CoreWeave is a stock that will probably bring up tomorrow morning and or tomorrow during the close. A lot of flows going into that stock as well. And it's moving like 8% on a day-by-day basis. That's one that is kind of sticking out to me outside of the index options that we talk about on a normal basis.
Yeah, that recently public AI stock really getting some big movement. I love the call out. Kevin, for those who check this out daily and they're watching this segment and they're really trying to follow what you're talking through when we're looking at some of these levels, you mind giving us a kind of an idea of how traditionally we'd expect the levels to interact? Like when we work towards this dealer positive pressure, is that going to act as resistance? If we move towards this negative dealer pressure, is that like a trap door? What does the textbook tell us, all else equal, we should do if we hit these levels?
Yeah, so what we are trying, and I'm going to try to do this fairly quick here. So the positive and negative levels here, if you're looking to the downside, we are making the assumption that all puts in the market that are being traded are being bought, which is obviously an assumption that we're making that's really not true, but that's really the baseline when you're trying to follow flows. So if we have individuals that are buying puts, dealers are going to be, short those puts. And so their dealer exposure is to the downside. They do not want to go through a particular strike price in order to try to hold up for now. That's the same thing with the upside. We look at this positive dealer pressure area here. We're making the assumption that all calls are being sold by individuals and all dealers are going to be long those particular calls. So there's a lot of kind of different methods in order to be able to try to calculate this out, but you're basically looking at the volume that is there sitting at a particular contract and then trying to calculate out the difference between the call activity and the put activity. When you're looking at gamma exposure or even vega exposure, you can look at pretty much each one of the Greeks, and you're trying to net out to see what's the net going to be. Is it a positive or negative? And is that going to be enough exposure to potentially have a dealer actually taking action in order to try to defend a level? And is this going to be a level where everybody else is really focusing on it as well? So as we kind of look at it this morning, we were talking about the 5,900, 5,905 level as your first area of potential support. And we have this chart up right now. The reason being, there's actually a significant amount of positioning sitting at the 5,905 level. And we've been highlighting this for the last couple of trading sessions. We've been flushing to the downside here. We went even below 5,900, but you saw some buyers really stepping in very aggressively, defending that level, not going through and staying and remaining through it, pushing to the upside here. We also highlighted 5,950, which was an area of resistance until we popped up to 5,960-ish or so, which is there's once again going to be some closing risk or some pen risk at 5,950. So we're just basically looking at all of the options that are being traded at each particular strike and netting out whatever the exposure is going to be from the Greeks and the larger exposed areas, if you will, is what we're really highlighting where upside, you could have some defending, or basically to the upside, you could have dealers basically trying to push prices down, contain prices. To the downside, trying to push prices up. This really works in a positive gamma market, but you're really trying to keep price levels compressed. And then dealers make money basically off the spread and theta decay. That's the thesis on this whole thing.
Yeah, all else equal, how I've always understood it, I think you did a good job of walking us through, is as you have them laid out here, as you'd work towards those green areas, the positive dealer exposure, think volatility compression, the dealers have a long gamma, they're getting longer as the market's going up, they want to keep it towards neutral, they're going to sell into that rally, compress volatility. But the opposite's true when gamma flips negative, and it almost acts as if it's a trap door. And you can see, similar to how the market reacted in the past, how it can quickly flush when it starts moving to the downside. So volatility accelerates and expands as dealer gamma gets negative. Kevin, as we look out through the end of the week, you expecting much? It's light economic data, relatively light earnings. I know we got Fed speakers. Anything in the positioning or technicals that has your attention?
Yeah, a couple of things. Kind of want to highlight, it's not only just downside, though. You could actually have these breaks or these gamma squeezes to the upside if you're able to break through a particular level aggressively enough to really trigger the acceleration of buying activity. So you're right. You get out of those bands enough, far away enough from those bands, either to the upside or downside, it could actually create more of a buying catalyst or a selling catalyst. We traditionally, when we see these negative gamma situations, actually see selling catalysts or breakdowns in the market. But in very strong bull markets like we've had over the last year or so, you actually do get excessive buying or call pressure or call buying activity that can create these squeezes. GME was the biggest example.